Hello everyone and welcome. Thanks for joining. We're just going to give it another minute or so just to let a couple of other people join, and then we're going to get started. Okay, let's get started. I'm delighted to be joined today by Alison Ensor and Jennifer Warner from ForemansLLP, who will be taking you through all things tax related, but more specifically income tax self-assessment. As there's an awful lot to get through, I'm going to leave adequate time at the end for a longer Q&A session. Some of you have already emailed me across questions that you have, but for those who have any questions regarding this webinar or any questions generally about tax, please feel free to pop it into the questions box on the right hand side of your screen, just so that I'm able to check as well that the chat function is working correctly. Please can I ask you to write in your name and where you're dialing into this webinar from today. Okay, so hello to Josh from London. Thank you for joining us, Josh. Hiya, Jill from Glasgow. This webinar is amazing. We have like 600 people on it tonight, which is crazy. So thanks so much to everybody for joining. Oh my goodness, look at all these. Hello, Peter from Oldham. Hi, Viv. And there's Kenny from London. Martin from London. Yes, this webinar is going to be recorded for future viewing. That's one of the questions that came through there now for me. You'll get an email about this tomorrow morning at 9 AM, which will contain the recording for you. Right, so it's great to see that the chat function's working, and it's great to see so many people on this evening. So we'll just move on. Okay, so now that we're all comfortable with this feature, I'm going to run through some housekeeping for any newbies to our webinars, and afterwards I will take us through the agenda, and then it's over to Foremans. So firstly, all mics are automatically muted. On the right hand side of your screen, you should see a text box where you can use to ask any questions you want at any given time throughout this presentation. Please note that all the questions asked throughout this webinar will be answered in the question and answer session at the end. On this webinar, we will be asking for your feedback about what you think of our webinars, and we'll be asking you to rate it between 1 and 5, 1 being terrible and 5 being excellent. This is really just to gather your thoughts on these webinars, as it can be quite hard for us to tell how beneficial they are for you. So when the poll question comes up on the screen at the end, please do vote and we'll share the results with you after. Finally, we will be sending out our follow-up email tomorrow morning at 9 AM, which will contain the recording of this webinar. So we'll just move on now to the agenda. So here's a quick snapshot before I pass you across to the lovely people at Foremans. So this is what we're going to cover this evening. What is a self-assessment tax return? Who needs to complete a SA return? Basic principles of self-assessment return, COVID-19 grants inclusion, how is the tax calculated, deadlines for submission, penalties for non-completion, deadlines for payments, and then we will move on to the Q&A session at the end. So without further ado, I will now pass you across to Alison, who's going to take you through self-assessment income tax returns. Just so you know, we have pre-recorded Alison's part of this webinar because we wanted to ensure that we were able to get all of the correct information in without missing anything out, as there's a lot to take in. Alison and Jennifer are both live on this webinar at the moment, so at the end, they will be taking all of your questions live. So like I've said throughout this webinar, please feel free just to go ahead and pop them into the chat box. So if you just bear with me, I'll just get Alison's recording up now.
Welcome to this webinar on self-assessment income tax returns. My name is Alison Ensor and I'm a partner at Foremans. We are a chartered accountancy practice specialising in helping the self-employed make the most of all their tax allowances whilst remaining compliant. The aim of the webinar is to give you an insight into what a self-assessment tax return actually is, identify if you need to complete one and how you should go about that, how the tax is calculated and when you should file that return by. We will look at what the penalties are for non-completion. I've also considered the government responses to the recent pandemic and looked at how they affect the reporting and calculating of the tax for the 2020-21 tax year. A self-assessment tax return is what it says it is. You self-assess what tax you need to pay each tax year by collating the information and presenting it to HMRC. Depending when and how you file, HMRC may calculate the tax for you or you calculate it yourself. However it is done, you are responsible for it being correct, paid and filed on time. HMRC will check the return to ensure it is correct, and with the increasing access to data on computers, it is easier than ever for errors to be identified by the tax inspector. So who needs to file a tax return? Well, the very good news is not everyone. You do need to file one if your tax affairs are complicated, and there are certain categories of individuals who must file. They are the self-employed, company directors, trustees, and anyone in receipt of foreign income. Our best advice is to consider filing a tax return if your income is higher than the personal tax allowance for the year and not already taxed through your employer's PAYE scheme. If you decide you do need to file a tax return, then you should tell HMRC as soon as possible, for example when you start trading or are appointed a company director at Companies House. Remember, filing a tax return is your responsibility, not HMRC's. It is not an excuse to say I did not know I needed to do one. If you do need to register, you can do so at www.gov.uk. You will need your unique tax reference, your national insurance number, and some information about why you believe you need to register. If you are registering because you are self-employed, then you must register with HMRC within a time limit. You must register by the 5th of October following the end of the tax year you became self-employed. So for the tax year 2020-21, you would need to register by the 5th of October 2021. HMRC will need your unique tax reference, your national insurance number, and some information about how you're going to trade and what you're going to do. Remember, it is your responsibility to ensure you register on time. There may be penalties for not registering. When you register the new business as self-employed, you should also consider registering for Class 2 national insurance, especially if you need qualifying years for your state pension. I have previously mentioned your unique tax reference, also referred to as your UTR. This is an individual tax reference which we all have. You may be aware of your national insurance number, but not everyone is aware that they also have a UTR. It will not automatically have been issued to you. You cannot file your tax return without one. If you have any personal correspondence from HMRC, it may be listed as a reference on that documentation. You are looking for a 10-digit number shown as 2 blocks of 5. If you don't have it, you will need to request it from HMRC. You cannot correspond with HMRC without it, and unfortunately HMRC will not release your UTR to your accountant, as it is personal information. If you're already completing tax returns, you should receive a notice to file from HMRC in the April following the end of the relevant tax year. So for 2020-21, those notices should have been sent out and received in April 21. If you're registering for the first time and HMRC agree you should file, you should receive a notice to file from HMRC as soon as you are registered. If you don't receive a notice, remember it's still your responsibility to file on time. It's not an excuse to say I didn't receive a notice. You complete the tax return or speak to HMRC if you don't think one is due. The main form to be completed is referred to as an SA 100, and there may be additional SA forms, so SA 105, 103 and 104, to complete dependent on what type of income you have. A new form is created for each tax year in order to account for changes in the tax regimes, so ensure that you complete the correct tax year form. So what income should be included on your tax return? The answer is all income you have received between the 6th of April and the 5th of April in a tax year should be included, whether you've already paid tax on it or had tax deducted at source from it. So, for example, your employment income as stated on your P60 received from your employer should be included on the SA 102, one of the additional forms to the SA 100, with the tax deducted also noted on that form. In simple terms, all the income is added together, the tax calculated, and any tax already paid deducted from that due. There are some specific exemptions to the inclusion, and if in doubt, ask your accountant or the person or organisation paying that money to you whether it should be included. Ultimately, you could always include in the any other information box of the SA 100. 2020-21 has been an unusual year in many ways, including the tax system. From a tax return point of view, we've seen a number of new sources of income for individuals and businesses in the form of coronavirus grants and payments from the government, some of which are taxable and some are not. From an individual's point of view, there are two main types which will form part of an individual's income, namely the furlough scheme and the Self-Employment Income Support Scheme, or SEIS. Both are taxable in the hands of the individual. Furlough payments should have been paid through the employer's payroll and therefore taxed at source. Any details will already be included in the P60 and therefore included in the tax return via the P60. SEIS, however, will not have been taxed at source and must be included on the tax return. An additional space has been created on the 2021 tax return specifically for this. The individual should add up what they have received in the tax year and include that on the return as part of their total income. There are also some expenses that can be included on your tax return to be deducted from your income before the tax is calculated. These are business expenses that have not already been reimbursed from the business. So, for example, business mileage not reimbursed could be claimed at the HMRC allowable rates of 45p per mile for the first 10,000 business miles and 25p per mile thereafter. Remember, these should be expenses not already paid to the individual by the business. Things such as professional subscriptions and training were paid for by the individual. One additional allowance may be of particular interest following the lockdowns, where someone works from home. Work being income generating work rather than just business administration. The HMRC allowance for out-of-pocket expenses is £6 per week. Alternatively, it can be calculated using bills, floor space, time used, etc., but that can be quite a difficult calculation. Due to the pandemic and the government instruction to work from home, HMRC have issued a concession allowing the £6 to be claimed even if you only partly worked at home during the tax year 2021. Once all the income, expenses and allowances have been identified on the tax return, then the tax calculation can begin to be carried out. In this simple example, we add together all of the income, gross salary from an employment of 28,000, self-employment of 15,000, a pension of 5,000 and rental income of 3,000 to give us a total income of 51,000. We then deduct some allowable expenses, being business mileage at £2,000. The total net income is therefore £49,000. The personal tax allowance for 2020-21 is £12,500. This is an allowance that every individual receives so that they can earn £12,500 without paying any tax. The taxable income, therefore, is £36,500. The taxable income of £36,500 is then taxed at the basic rate of tax at 20%, giving a tax charge of £7,300. In this particular example, the individual has already had tax deducted at source of £3,100 from their gross salary through their employer's PAYE scheme. The amount already paid to HMRC on behalf of the individual by the employer is then deducted from the amount due, giving a total of £4,200 to be paid to HMRC. Self-assessment tax returns are annual and relate historically to a period from the 6th of April to the 5th of April each year. The last completed tax year was the 2020-21 tax year, and we are currently in the 2021-22 tax year. The filing deadlines depend on how you file. If you want to file on paper, you can do so, but you must do it by the 31st of October following the end of the tax year. If you wish to file online, you must do so by the 31st of January following the end of the tax year. You can file earlier if you wish. So, for example, the 2020-21 tax year will need to be filed on paper by the 31st of October 2021 or online by the 31st of January 22. Any tax is due by the 31st of January following the end of the tax year, so the same as the online filing date. So for 2020-21, any tax due must be paid by the 31st of January 2022. The pandemic did cause issues with regard to the 2019-20 filing deadline of the 31st of January 21. The original paper filing deadline was the 31st of October 2020, and that still stands. The online filing deadline was the 31st of January 2021, and despite representations from all of the accountancy bodies asking for a delay to the filing date, HMRC insisted that it would not be postponed. However, on the 25th of January 2021, it was announced that there would be no late filing penalties imposed for returns filed by the 28th of February 21, effectively giving an additional month to get the returns filed. However, you should be aware that payments were still expected on the 31st of January 2021, and that deadline was not extended. Interest on late payments would therefore accrue from the 1st of February 2021. One area of confusion with regard to payments is payments on account. If an individual's tax bill in any tax year is more than £1,000, then they will be expected to make payments on account towards the following tax year. The payment on account is split into two equal payments, one due on the 31st of January in the actual tax year it relates to, and the second due on the 31st of July in the following tax year. For example, an individual has a tax liability for 2020-21 of £4,200. The payment should be made on the 31st of January 2022. Because the bill is greater than £1,000, the individual will also have to make a payment on account. The first payment on account for the 21-22 tax year is also due on the 31st of January 2022 and is for half of the previous year's tax, so £2,100. The total amount due to HMRC, therefore, on the 31st of January 2022 is made up of the 2021 tax due of £4,200 and a payment on account of for 21-22 of £2,100. The total due to be paid on the 31st of January 2022 is therefore £6,300. A second payment on account for the 21-22 tax year is due on the 31st of July 2022 for £2,100. The two payments on account will then be deducted from the amount of tax due for 21-22. If the taxpayer believes that their income tax bill for the next year will be less than the payments on account, then they can reduce those payments on account by asking HMRC to do so. However, they need to be aware that if this is then proved to be incorrect, there will be interest and potentially penalties for not paying the payments on account. If you file your tax return late, then there are penalties, even if there's no tax due. After midnight on the 31st of January, there is an immediate late filing penalty of £100. The penalties then increase. After 3 months, there is a daily penalty of £10 per day up to a maximum of £900, and 6 months late, 5% of the tax due or £300, whichever is the greater. These are cumulative penalties. There are also penalties for non-payment of tax, and interest may be charged. If you receive a late filing penalty and you believe you have a reasonable excuse, then you can appeal the penalty. You must have what HMRC regards as a reasonable excuse. I forgot to file is not a reasonable excuse, and appeal the penalty within 30 days of the notice of the penalty. HMRC have actually extended the 30-day appeal rule due to the current pandemic for up to 3 months if the delay is COVID-19 related. HMRC will normally expect to see proof of any reasonable excuse, which could include medical or hospital appointments, etc. There is an appeal form which should be completed and forwarded to HMRC. We would recommend also enclosing a letter, as there is little room for explanations on the form. HMRC have also announced that they may, in the circumstances, waive the daily penalties relating to any 2018-19 returns due to be filed online on the 31st of January 2020. If you did incur these penalties, you may wish to consider appealing them. We have discussed what to do if you are starting out with self-assessment and also if you're in the middle of doing self-assessments. But what should you do if you believe you no longer need to complete a return? Firstly, you need to ensure that you really do not need to complete that return. Remember, it is your responsibility to complete all returns. Get advice, whether that is from your accountant or from HMRC, by explaining your circumstances. Do not just ignore the request. If HMRC asks you to complete, you should do so. Otherwise, there will be penalties for non-filing, even if you do not have tax to pay. Once you are convinced that you are correct, that you do not need to file, you can write to HMRC or phone HMRC. Always get confirmation in writing so that you can prove that you really don't need to do a return and have agreed it with them. You can also deregister through your personal tax account. If you don't have a personal tax account, you can register for one of these through the .gov.uk website. The most important thing is ensure that you are correct, that you no longer need to complete that return, as it is your responsibility to do so. So you might ask, what do I do now? Well, the first thing is don't panic. You have time to sort this out. The 2020-21 registration deadline is the 5th of October 2021 if you're not yet registered for self-assessment, and the online filing is by the 31st of January 2022, so there's plenty of time. Don't, however, put it all to one side because that time will go quickly. You should have received most of the information you need for your tax return by now. So you need to decide if you need to do a self-assessment tax return. If you're not sure, seek advice. Ask your accountant. Register if you need to, if you decide that you need to do a return. Check everything through and ensure you've got everything. And then ask for a UTR. Complete the tax return. And most importantly, remember to file the tax return by the deadline date and pay all of the tax due. Thank you for listening to this webinar. I hope it's proved useful and answered some of your queries. If you do have any questions or you want to discuss your situation, please feel free to contact us at Foremans and we will be more than happy to help. We look forward to hearing from you.
So now it's time for our Q&A session, and we've been seeing lots of questions flying in here for Foremans. So the first one here is a really long one, which was sent to me prior to this webinar by a locum of ours. So it's kind of two questions in one, so bear with me, Alison or Jennifer. I'll just read it out to you here. So this locum is asking, I imagine I must not be alone in being a locum who took up a different job last year during quieter months, while remaining self-employed as a locum community pharmacist. In my case, I work from home for about 70 hours or so as a contact tracer, earning around 1,100 in the process. What should I be aware of when considering how I save for my tax bill and how I go about recording this short-term employed work in my self-assessment? And then the next part of it is, I received a P60 last month from my employer for the contact tracing job, and it shows that tax has already been paid on those earnings. I obviously don't want to pay tax twice, but also don't want to underreport and end up in trouble. I also understand that I may be able to claim some relief due to the fact that I worked from home during those 70-ish hours. Is this correct and applicable in my case? And that's from Jacob Owen.
Okay, well, Jacob, firstly, short-term employment and the P60 does need to be included on that tax return, and you need to put the figures, the salary and the tax on the return. And when your taxation is calculated, the tax you've already paid will be allowed for. It will be taken off as already paid. You need to ensure, one thing you do need to ensure is if you've ceased to work for them, you should get a P45, otherwise your tax code could be affected if you go on to have another employment or do something else for somebody else. So I would, if you finished working for them, request a P45. You're working from home, you can actually claim full allowance if you've been working at home and not paid for work, an allowance for working from home. You can claim the full £312 for 2021 as a tax allowance. You put that again on the employment forms on the self-assessment tax return. So I hope that answers your question.
Okay, brilliant. Someone else said, Janet, full-time staff taking a few locum shifts on weekends, do they need to be declared as self-employed?
Simple answer to that one is yes. any income you receive should be declared on your self-assessment. So that self-employed income should be declared as self-employment on the tax return.
Okay, and I've got another one from Mo. Hi Lauren, thanks for a great intro. Thank you. Please could you help clarify a question? I've heard there are new changes to submitting your tax returns. I can't recall, but it was something to do with a new R code and something to do with if you are classified as an employee of certain companies that have certain staff. It's a bit confusing. I was wondering if Foremans could clarify that, if there are any changes being made to tax return submissions this year, and if we as locums are classified as employees of companies where we might get regular locum work.
Yeah, I think there's a couple of things in there. I am not aware there are any changes to the tax return system for 2021 or 21-22. There is some discussion about changing the actual dates, as I said, to be the 1st of April to the 31st of March, but the actual returns, I'm not aware of any changes. If somebody is, please let me know, but as far as I'm concerned, there are no changes. And then I think the second thing on that was, do you have to put your self-employment on the forms? Correct me if I'm wrong, Lauren, but I think that was the second part of the question. And yes, you would have to put the self-employment on there. You are, as a locum, you are self-employed. You are not an employee unless you're told you're an employee and you're getting a pay slip with tax and NI deducted from it, and you get a P60 and a P40, those sort of things. If you're a locum, I would expect you to be self-employed.
Okay, and I've got one from Michelle. How does IR35 affect locum pharmacists in terms of tax planning and being taxed more than before?
IR35, which is the changes that came in April, this is all to do with whether you are an employee or whether you are actually self-employed, and it's a contract by contract thing. So you have to look at your contract. Now, if you're deemed, or that contract is deemed by the person issuing the contract, so the person that's paying you is deemed to be within IR35, then you will have taxed and NI deducted. If it's deemed to be outside IR35, you will be paid gross, but it will be an assessment by the person that's paying you, and it's an assessment based on that contract.
Okay, this one's from Larissa. I have a PAYE and only work as a locum once in a blue moon. Once in a blue month. Income from locuming is less than £1,000. Some websites say that self-employed income less than £1,000 don't need to file a tax return. Is that correct?
If your income is less than £1,000 in a tax year, so from the 6th of April to the 5th of April, there is an allowance that says you don't need to file. So if you've got income of less than £1,000, you don't need to file. That is income, not profit. So it's the money you receive before you take off any expenses. So you don't need to file if that's less than £1,000.
Okay, and I've one here from Crystal. I have a PAYE job and locum on the side, but only make about 2,000 to 3,000 per year. Do I still need to do the self-assessment tax return?
Again, if you only receive less than £1,000, you don't need to do it. But if it's more than £1,000 that you receive, again, it's not after you've taken off your expenses. So if you're getting £2,000 to £3,000 a year, you have to declare it.
Okay. God, there's loads here. We've maybe got about time for one more. Let me just see. If I start self-employment in July 2021, does that mean I must file for self-assessment latest by next year, October 2022?
Yes, is the simple answer to that one. Not file, you have to register. So you have to let HMRC know that you will need to do a 21/22 tax return. So you need to tell them by the 5th of October 22.
Okay, and then we'll just do one final one and then we'll close up. This one's from Elizabeth. What do I do if I have not received my P60 from my previous employer?
I think I'll let Jen take that one.
You should have received your P60 from your previous employer by the 31st of May after the end of the tax year. That's when all employees should have been given that P60 form. Could be an admin error. Our P60 would also be for an employer that you're still currently employed with. So in fact, if you've left that employment and you're not working there, you're not in touch with that employer, have they issued you with a P45 at the end of your employment? Because you should also have had that form. If you've had a P45 within the tax year, so before the end of the relevant tax year, you won't also get a P60 because all of your income from that employment in the tax year will be included on the P45. If you're still employed by the employer, which is quite possible, for example, if you're doing a bit of employed work on the side, you're normally working as a self-employed locum, you've been doing odd shifts here and there, but you're actually still on their payroll, you're still employed by them, and you haven't had the P60, that does sound like really a bit of an admin error on their side. So your first port of call is to get in touch with that employer and just ask them whether you can have that document. If you get to the point, and there's quite a way to go, so there's plenty of time if we're looking at the last tax year and you're looking to file the return by the end of, for example, January 2022, plenty of time to get that form. But if you come to the point of filing and you're still struggling to get the P60, the values on there should also be shown on the last pay slip that you receive within that tax year as well, because the P60 will show the total income that you've earned from that employment for the tax year, and also the total tax that's been deducted from you for that employment as well. Your pay slip, the last pay slip you've received in that tax year, should have those year-to-date figures on it. So that is another way to access those figures. But your employer, if you're still employed by them at the end of the tax year, should provide you with the P60. As I said before, if you've left that employment within the tax year, you'll have the P45 instead. And those year-to-date values, everything you've earned in the tax year, all the tax you've paid in that employment will be included on that P45 instead.
So thanks everyone again for joining us this evening. We hope that you found this webinar both useful and insightful. A huge thank you, Alison and Jennifer, for joining us this evening. Thanks both very much. Okay, well that's us. Thank you everyone. I hope that you have a lovely evening and I look forward to seeing you all on here again soon. Take care now. Bye-bye.